All right. Good evening, everybody. All right. A lot going on in the world today. I hope you guys all had a very nice weekend. It was a very busy news weekend. Let's put it this way. A lot has happened since we left off Friday afternoon. The banking crisis has continued despite repeated assurances of the strength and resiliency of the banking system, and despite all of these statements telling us how safe everything is, the actions of governments and banks and central bankers and regulators clearly say otherwise. And there has been so much activity has come out in the last few days. Let's start. Credit Suisse. They were bought out by UBS today in a deal that is, let's just say this stands on very shaky legal ground. And that's putting it mildly, folks. They are just throwing out the law whenever they see fit. They're just changing the rules whenever it's convenient for them. And that's not how you restore faith and confidence in the banking system, by setting aside your own rules when it suits you. That's not how you reassure everybody that you've got it under control. That's how you show everybody you're an imbecile and you're a crook and you don't know what the heck you're doing. And so sue me, I'm just going to do it anyway. That's what they're telling us. So UBS, now the biggest bank in Switzerland, or they're already the biggest bank in Switzerland. They just got even bigger. They are taking over Credit Suisse in a $3.3 billion deal that has some really shady riders attached to it. That one just hit the airwaves today. We've also got rumors that Warren Buffett is getting involved in the collapse of regional banks here in the United States. To what extent, nobody knows. They were supposed to, or the rumor had it, they were going to release some kind of a statement before Asian markets opened today. Well, that came and went, so no. I guess they couldn't reach a deal, whatever they were doing there. And then just minutes before I went live, the story broke that Signature Bank's assets have been taken over by Flagstar Bank. Who? Flagstar Bank, a branch of some New York community bank. They're taking on the assets of Signature Bank. However, all those crypto assets, the digital banking business, is staying with the FDIC. So the government came in and said, you know what? We've got this Signature Bank. It hasn't failed. Signature Bank never failed, folks. We're just going to take it over. We're going to take it. It's ours now. Thank you. It's ours. We're going to take out the business we don't like, the crypto business, and then we're going to give everything to somebody else. We've still got the crypto business. You're frozen here. You're still ours. You're mine now. Total takeover of cryptocurrency by the government. With the collapse of Silicon Valley Bank, the collapse of, Silvergate Bank never failed. They just shut their doors because the government made it so they couldn't do business. And then they just took over Signature Bank. So there is so much going on in the world. So much. And look, folks, let me just tell you, they have got hours, maybe days, to get this thing under control. I don't know if what they did today, and don't even get me started on what the Fed just did. If they don't get this under control, and I mean the whole thing, because you've got two different stories now. Okay, you've got the global international contagion, the Credit Suisse story. And boy, did they launch an artillery barrage at that. The Swiss National Bank went over the top with that Credit Suisse story. Was that enough to stop the contagion in European banks? We don't know. We'll find out when markets open. But the parallel story is the decline of U.S. regional banks. The situation that was 100% manufactured by the FDIC and the Federal Reserve and Janet Yellen. When they created free insurance for the big banks, none for the little banks. Sorry, I accidentally triggered my music there. When they created that free insurance, what they did was they told everybody, take your money out of the little regional banks, anybody with deposits above the FDIC limits, and go send them to the big banks. So they created the run on the big banks with this FDIC bailout of Silicon Valley Bank. And now that is underway. And if that doesn't stop, every regional bank in America will go under eventually, probably very fast. There was a report came out a few days ago. Actually, it was just Friday afternoon. It came out that said 186 banks are at risk of a Silicon Valley style collapse. Now, those 186 banks do not have the unique customer base that Silicon Valley Bank had. And a lot of people blame the unique customer base of Silicon Valley Bank for the collapse because they lent to so many tech companies. But you know what? That may be what started this avalanche. But now that this avalanche is going, it doesn't matter what started it. It's going. And so all these smaller banks, whether they have tech company depositors or not, they're vulnerable to this avalanche. And in my opinion, this is my raw, unfiltered opinion right now, if the FDIC does not walk back this policy, then they won't be able to stop the collapse of regional banks. If they don't come out and say, you know what, we screwed up here. We screwed up when we decided we were going to go above the FDIC limits and bail out Silicon Valley Bank because our political friends are not allowed to lose money. When they did that, they created the run on regional banks. So now they have to stop the run on regional banks. There's two ways they could stop the run on regional banks. They could walk back this policy and they could let Silicon Valley fail, and they could let the customers who have more than the FDIC insured amount be bailed in as the law says. That was the law. The law that Congress debated and voted on and legislated and passed, and Obama had his little signing ceremony with Dodd and Frank and everybody standing behind him. Yay, we solved the banking problem. Yay. And then things get difficult and we say, no, the hell with that law. We don't need it anymore. No, we changed our mind. As soon as things get hard for us, we don't follow those laws anymore. Those silly rabbit, those laws are for you. If they don't undo that, if they don't go back and say we're going to follow Dodd-Frank, then they will create a global bank run. Because they'll either continue the run on regional banks to the point where all regional banks collapse. And boy, when that starts, you want to be out of the way when that starts. Or the other thing they're talking about doing is increasing the FDIC insurance limit and say, okay, now we're going to insure all the regional banks too. We're going to insure everybody, unlimited money printers. Well, that's a very Fed thing to do. That's a very U.S. thing to do. Sure, we'll just insure everybody. Money grows on trees, rob the future, whatever, no problem. Well, if they do that, then they're going to create an international bank run because everybody with deposits in foreign banks is going to say, I'm going to go to the U.S. where I can get free insurance. And I think a little bit of that is happening with Credit Suisse. Credit Suisse was already on life support. I mean, that bank has been so terribly managed for so long. They were going to fail either way. But I think what they did with the free insurance at big U.S. banks only accelerated that demise. And if the FDIC doesn't stop it, then get out. It's going to be, the Fed is going to end up taking over all banks. All money will flow to the United States and end up in big U.S. banks insured by the FDIC. And that's going to create a massive dollar shortage because to put your money in American banks, you have to put it in dollars first. And what are we seeing right now? We are seeing a massive dollar shortage. So what did the Fed do? The Fed said, bazooka time, baby. Statement just issued not too long ago. Dollar liquidity swaps are coming. And guys, this, well, buckle up. There's a lot to talk about. So I'm going to bring my man Mish in, who has been Johnny on the spot with the data all weekend. And let's say hi to Mish. Mish, how we doing today, brother?
How you doing, man? I got a story for you that kind of sums this up.
All right.
Back in the day, I was on my first cruise out to the Gulf, and I stood watch in Damage Control Central, is where we kind of run the engineering and damage control out of. And I had an officer to my right who's doing turnover, right? They're talking about it. And as the guy says, I relieve you, I stand relieved. The guy leaving says, oh, by the way, there's a fire on the flight deck. Deuces. And that's kind of how today feels.
Oh, by the way, there's a fire on the flight deck. Might want to lead with that next time. Okay. I mean, you know, that might be more important than fresh coffee in the pot.
Right.
Although on a ship, coffee is a very important commodity. I don't know about Navy boats, but commercial fishing boats run on coffee, man.
Right.
Real quick, before we get too deep in these, I want to say thank you very much to Nashville Pasta Man for the super chat and the support of the channel, sir. He says UBS pays $3 billion with $100 billion national loan. 3,000% over purchase.
So that national loan is kind of a guarantee.
It's a credit line.
Yeah.
They can draw up to that. And we're going to get Pasta Man. Well, let's just talk about that. This credit line that came, And this is the deal they worked out in the middle of the night. UBS is taking over Credit Suisse for $3 billion for shareholders. Put a pin in that. We'll come back to that one. But this $100 billion Swiss franc, they're roughly even. I think it's 100 billion Swiss francs, which would be like $120 billion or something like that. To put that in perspective, the size of that credit line, I mean, the amount of credit they're giving UBS to take this over, the entire GDP of Switzerland is 800 billion Swiss francs. So they're giving UBS 1/8 of GDP in a credit line, 12.5% of GDP in a credit line for taking over this bank. That would be like if JP Morgan took over a troubled bank. That would be like them getting a $3 trillion credit line from the Federal Reserve. 1/8 of GDP. That unbelievable how much. And when I said they opened the floodgates of liquidity and they're firing the bazooka, oh boy. Now you might be wondering, where's the Swiss National Bank going to get that kind of money from? Oh, just wait. It gets better, folks. This just keeps on getting better. And by better, I mean so much worse for you and I. Thank you very much, Nashville Pasta Man. I really appreciate the super chat, sir. As always, you are a gentleman and a scholar. And thank you, Freedom for All says, stand against debt. Silver and gold are money only. I agree. Silver and gold are money. Absolutely. And I'm not a big fan of debt. Although if they do what they're promising to do right now, if this becomes a thing, if this becomes the standard, you better be ready for rip your face off inflation, folks. Now, there are some people on FinTwit who I've seen people accuse them of engagement farming or whatever, who are saying, this isn't inflationary. These are temporary liquidity programs and temporary swaps and the way they work there. You know what? Bitcoin doesn't believe you. Bitcoin is rallying like all get out. The NASDAQ doesn't believe you. The NASDAQ is marching straight up on this news. Treasuries don't believe you. Bond yields are cratering because bond prices are rallying. All right. If this isn't inflationary, then why are asset prices exploding higher right now? Remember, inflation first hits assets. That's where it shows up first. And it is showing up instantly in assets. And folks, we still got 6% CPI. Get ready. If they follow through with this, if they keep doing this, and oh man, if they just keep, as the banks fail, they just pump more money in and more money in, which so far that's what they've done. Every day, another story gets worse, and they just pump more money in every day. Get ready for inflation like your worst nightmares. And I'm telling you, a lot of people are like, oh, I've got 100 ounces of silver. I'm ready for it. Or I got a few ounces of gold. You have no idea, folks. This is the kind of stuff that drives civilizations mad. Collect like mass formation psychosis in real time. I mean, this stuff drives societies insane. I pray that is not what happens. There's still time to stop it. There's still time. Thank you very much, Freedom for All. What was that, Mish?
We're about 6 deep on super chats.
About 6 deep already. All right. B. Sim says, buy the metals, gold, silver, and Beskar. I see a little Mando reference there. All right, then, Jaron. We'll get a little Beskar going. By the way, those Beskar bars are selling for ridiculous premiums, if you can even get them. The silver or platinum bars that are shaped like the Beskar bars from The Mandalorian. I can tell you, folks, and I was debating whether or not I was going to say this, but let me just say this. I bought a little bit of metal this weekend. Bought a little bit of gold, bought a little bit of silver. I also got a little bit of cash. I want to make sure if the credit and the debit card stop working, I can still feed my family. All right. So I was debating whether or not I was going to talk about this. I don't want to add to a bank run. I don't want to be accused of trying to scare people and stirring up hysteria. But at the same time, if I'm going and taking actions to protect myself, being in the position I am with a voice on YouTube, if I'm taking these actions to protect myself and my family, and I withhold that information from you guys, well, that's not very ethical, is it? At the same time, if I say what I'm doing, knowing that what I'm saying could potentially contribute to making the situation worse, because if everybody goes out and gets cash, it's going to make things worse. Well, then that's not very ethical either, is it? And when I'm in a position where no matter what action I take is going to be somewhat unethical, the best thing I can do is just be straight with you guys and tell the truth and be honest. And so I got a little bit of cash and I got a little bit of metal this weekend. That was what I did. Oh, and I planted some leafy greens. It's mid-March. It's time to get your seeds in the ground. It's a little early, but not for leafy greens. So I'm also
leafy
doing
greens.
actual leafy greens, Mish. Don't get excited. I'm talking lettuce. I'm talking spinach, and I'm talking a little bok choy. I love stir-fried bok choy. It's so good. So I got some of that in the ground this week, a whole bunch of it. I'm going to see if I can get a little bit of food out of the dirt this year. Thank you very much, B Sin, for the super chat, sir, and the support of the channel. I'm falling behind. Contrarian08 says, how much percent of total liabilities for regional banks is accounts with more than 250,000? Because most high net worth accounts are not in regional banks. No. So I can't give you that number. Go ahead, Mish.
Okay, so regional banks and city, like town banks, what you have is you have older generation people with a lot of money in the banks. So you do have quite a bit of assets in regional banks that are under deposited, or like they're over 250,000. There are farmers out there that they go to their bank with their town of 2,000, and they're running a couple million through that bank. So they're out there. So I've heard numbers of 50, 40%. I don't think it's really known at this point.
And again, I just want to reiterate that point, and thank you, Mish, for that data. Stephen Van Meter did a video Friday night. Great channel, by the way. I watch Stephen all the time. And he highlighted this report that there are 186 banks, at least 186 banks, that if 50% of depositors above FDIC thresholds, all right, if only half of the big money pulls out of that bank, that bank would fail. 186. All right. And the anecdotes I'm hearing from people all over the country right now, I am getting a lot of emails and a lot of messages from people. I'm not going to betray any confidences. People don't want names and companies out there. This is happening at a lot of places. Money is moving like crazy right now. There is a flight to safety within the banking system happening. And apparently there are 186 banks where if half of their big money clients do this, they go under. And right now, folks, we've only had Silicon Valley Bank fail. Credit Suisse, okay, they were about to fail, but they never actually failed. They never went into receivership.
Yeah,
they would have on Monday.
About to fail for about 4 years now.
Yeah. Silvergate shut down, didn't fail. Signature Bank was taken over, didn't fail. First Republic got that $30 billion cash infusion, and it looks like that has already been burned through because they're already talking about another rescue of First Republic. So we've only had one actual bank failure so far. Only one. But they're doing everything they can to stop any more from failing. So this problem is widespread. All right. The headlines, they may come out and say only one bank has failed, but trust me, a lot of them are on the brink right now. Thank you very much, Contrarian, for the super chat, support of the channel. And thank you, Darren Jones, sir, says if and once CBDCs get implemented, oh my God, I hope not. They may not hinder our freedom right away, but if they ever do, it will be impossible to reverse because anyone that puts up resistance, they will just turn off that person's buying power. You're right. You're absolutely right, Darren Jones. And they're coming. The Fed now is being launched in July. Watch them move up that date. Watch them move that up now that the crisis is there. I think CBDCs are coming, and you need to resist it, folks. And I'm telling, unbank yourself. That is my message. That is what I am doing. I am slowly unbanking myself, at least a little bit. I mean, look, life is the way it is right now. Most people have mortgages to pay, utility bills to pay, things like that. You need a bank account to function in today's society for most people. And if you can't, God bless you. You have achieved a level of freedom I aspire to. But
hey,
most
Jack,
people need a bank account.
Jack, go to the bond market.
Go to the bond market. Okay. Mish has seen something. Let's go world government bonds. What country are we going to, Mish?
Ours, U.S.
U.S. all the way down. Okay, what do we have going on in the U.S.? We have yields are rising. Dollar shortage, buddy. What am I looking at? 33 basis points on the 1 month.
Yeah, that's what we're looking at. And everything else is right around 10.
Ooh. Okay. So what do we got? Market pricing in. Say that again?
We got that pointed out to us in chat.
Yeah. That 1 month. I mean, they're at 4.3. Keep in mind, the Fed's overnight rate right now is 4.5 to 4.75. It's starting to look like we're going to get another 25, which, if the Fed is pumping trillions through swaps, I guess it doesn't matter if they hike 25 basis points. They'll just inject more liquidity. But yeah, look at that big. Okay, and then just like that, it went to 8. That's interesting.
Mhm.
Before my eyes, it just went from 33 to 8. So we got a little bit of volatility going on in the bond world right now, folks.
That is a lot of money moving, is what that is. That's central
Yeah,
bank actions.
that's interesting. Thank you guys for pointing that one out. All right, let me. Where was I? I got to finish on this one. I'm falling behind on these. Yeah, let me just say on the CBDCs, folks, nothing good for us on CBDCs. There is nothing good for the average person down that road. Resist it with every fiber of your being. Thank you very much, Darren Jones. I appreciate it. And thank you, Robert V, or Robert the Fifth, who says, Jay Bravo said, if the Fed pivots, the market crashes. Yep. And I agree, right? When the Fed pivots, and in my opinion, the Fed did just pivot, all right? When the Fed pivots, the market usually bottoms a few months later. All right, now, right now, we appear to be in melt up mode. The Fed has pivoted and asset prices are exploding. But if what the Fed has done is not successful in restoring confidence, then the banks will continue to fail, and that will be very deflationary, and we'll see asset prices collapse under that environment. So we're still kind of at that fork in the road. My guess is we have not seen the bottom yet. Thank you, Robert. Appreciate that, sir, very much. I'm trying to catch up with all you guys. Freedom for All says fiat is debt only. Well, I always said fiat stands for F it, another trillion. That's what fiat stands for. That's my little acronym. I'd love to pronounce it outright, especially in the mood I'm in right now, but I don't want to. I don't want to get censored for the profanity. I'm not going to be profane. I'm going to keep my sailor's mouth in check right now. And Lucas Roth says, "Can you explain credit swaps? Credit default swaps?"
Well, yeah, I'd love to explain credit swaps. I think he
Okay.
means currency swaps.
Okay.
Because that's what's in the news right now. Lucas, tell me if that's different. But what a currency swap is when a company says, "Hey, United States, I need dollars. We're going to send over our money. Give us dollars for it." You never see it. It never goes through the market. It's all real behind the door. And honestly, they may not even exchange money.
Yeah.
So,
Yeah. There's the currency swaps where instead of the bank having to go to the Forex market, because we have a dollar shortage in Europe right now. There's a major dollar shortage. They're scrambling for bucks. If they have to go buy those dollars, say print Swiss francs and buy dollars, then the Swiss franc will collapse and the dollar will rally. We don't want that. We being the a-holes in charge in America, because we owe 31.5 trillion of them. You don't want the value of something going up when you owe 31.5 trillion of it. So these dollar swaps are ways to supply dollars to these European countries without them bidding up the price of dollars. And it's basically like, hey, we'll fix the Forex rate. You guys give us your Swiss francs. We'll give you the dollars. And then a month later, we'll swap back. And that way it doesn't drive up the price.
Well, where the problem comes in is in one, if they can't pay it back when it's time, so they have to print more of their money to get the money to send it over, right? Or the FX exchange rate changes, and all of a sudden they're in the hole. So that's where it starts becoming inflationary. It's inflationary from other countries.
Yeah. So I think what they're doing with these liquidity swaps that they're doing right now, or the currency swaps, is they're flooding the market with dollars, hoping the crisis comes to an abrupt end, and so that it's very easy to unwind those bets later. All right. It reeks of desperation. Let me just put it that way. It is definitely not the actions of somebody who believes in the stability of the financial system in its current form. And then the other thing you said is credit swaps. If you meant credit default swaps, that's basically insurance on a bond. That's if this guy can't pay it back, I'll pay it. It's insurance. So I don't know if we were talking about currency swaps or credit default swaps there, but
there's so much of this running around out there. I mean, you can even do credit swaps where I swap you a low interest loan for a high interest loan, and you have longer term income and I have shorter term income, but with a higher percentage. I mean, there's all kinds of crazy
rate
stuff.
swap. Yeah.
Mm-hmm.
Thank you very much, sir. And thank you, Contrarian08 says, if banking liquidity is an issue, the Fed can lower rates for the reverse repo market and encourage that liquidity to come out and lower yields that way. I'm kind of surprised they haven't yet, to be honest with you, although that's inflationary, Contrarian. And I mean, right now is the Fed, the Fed gets together this week. And I mean, is Jerome Powell really going to sit there with a straight face and tell us he cares about price stability on Wednesday? Is it Wednesday or Tuesday that it's
believe it's Wednesday, the 22nd.
Wednesday, the 22nd is the FOMC press conference. Is he really going to talk about the Fed's 2% inflation target now? Is he really going to talk about price stability and his dual mandate? I don't know. They could do that. They could just, pull the plug and let the reverse repo drain into the bond market. And maybe they will do that. But right now, the amount of money they're probably firing off in these liquidity swaps is going to dwarf the reverse repos, if I had to guess. It's going to be massive. Thank you very much, Contrarian08. Guys, I am trying to catch up on these. Where's AK? What's going on, AK? It says apparently there is $246 cash for every USA person. Not good. Mish and I, we were trying to figure this one out. There's a lot of statistics. I think it came out to something around 2.4 billion in nominal value or something like that. It was not billion, I'm sorry, 2.4 trillion,
trillion
of nominal value of Federal Reserve notes, paper currency. And that is made up of 50 billion actual notes. There's 50 billion bills out there, most of which are $100 bills. And then all the denominations, if you add it all up, it's somewhere around 2.5 trillion. So and I don't know how much of that is outside the U.S. I suspect a lot of it is outside the U.S. in the vaults of other banks, other central banks. All right, so there's not that many paper bills. If everybody goes and withdraws cash, the whole thing will stop working. Yes, abso-freaking-lutely. That's 1929. And, they keep creating it digitally, create it digitally. If everybody says, fine, give it to me in hard form, doesn't work. The whole thing stops. I'm not sure about the 246 number, AK. I'm not going to do the math off the top of my head while I'm live. Mish could probably do that in his head. If you see his eyes twitching, that's what he's doing. But thank you very much, sir, for the super chat and the support of the channel.
Thank
you,
246. Yeah, 246 comes from about 50 billion in cash.
Okay, that's so 246 bank notes is what it is. 246 notes, but 240 of them could be $100 bills. So, it depends on the denominations, and the $100 bill is the most common denomination note. Richie Vengeance, thank you, sir. He says small depositors may be insured at small banks, but if large players pull out for larger banks, local liquidity dries up and local economies die. You're right, Richie, and that's what's happening right now. The big depositors are leaving the small banks. The small depositors have no reason to leave the small banks because the small banks, their money is insured by the FDIC. It's the people with a lot of money at the small banks that are not insured above $250,000. They're getting out of Dodge. And that's enough to kill these small banks. If more than half of the big guys do that, these banks go bye-bye. And honestly, I think they got a little too far ahead of themselves with this. I think they saw the Silicon Valley situation and they saw an opportunity to grab power in the big banks, and they didn't quite realize they overplayed their hand. And now this thing is taking on a life of its own, and they're trying to stop it, and I'm not sure they can. I'm not sure they can stop it right now. They need to be perfect. They need to stop the European contagion at Credit Suisse and the run on regional banks, both dead in their tracks. If either one of those stories continues to gain steam, the whole thing unravels. And right now, we'll see Monday. We'll see. Maybe they've got Credit Suisse contained, maybe not. I don't think the regional thing has been contained yet. Not by a long shot. I think that's going to continue into tomorrow morning, unless something gets released while we're talking here. Maybe it does, maybe not. Thank you very much, Richie Vengeance, sir. Appreciate the super chat. And am I caught up? No, I am not. I've got Eric the West. Where is he? Thank you, Eric West. He says, for us longtime fans, can we get a deal when everything falls apart? Say a dozen eggs for an ounce of gold. I'll take that deal. You know what? Since I'm feeling generous, I won't even wait for things to fall apart. I'll give you that deal right now, Eric West. 1 dozen eggs for 1 ounce of gold. Anytime, brother. Catch my email in the About Me page. If you want to give me an ounce of gold for a dozen eggs, I shan't stand in your way.
You heard about the guy that bought a Bitcoin for $1 million off of another guy because he thinks it's going to be there in 90 days.
In 90 days?
Mm-hmm.
He probably could have got a better deal. Maybe you want to hold out for a better price than that. Hey, I got a little Bitcoin. If it wants to go to $1 million, I'll let you. I'll let it. But keep in mind, if Bitcoin goes to $1 million, it probably means really bad things happening. Really bad things happening. Thank you very much, Eric West. And thank you, Jose Orozco. So post-Yellen grilling taught us what? If we want our money safe, we should bank with the big guys. Chase, Wells Fargo, BofA, or the other few backwards. Nice work with the few backwards there, Jose Orozco. Can't say squirreled Beconomic Gorham on YouTube. You get yourself in trouble. But or the other approved banks. I mean, that's really what this was, and that's what Yellen told us with her testimony last week in Congress when she flat out said, only if me and my supermajority deems the bank worthy of protection. And the only banks worthy of protection are the FEW backwards banks, are her banks, the ones who think like she does. All the rest can go pound sand. That's what those were almost verbatim her words, not exactly, but that's what she said. So you're right, Jose. Thank you very much, sir. Appreciate the support of the channel and the Bucky's Core Nuggets, as always. Contrarian 08 is back, says maybe we get 2 more 25 basis point hikes. One and done if we get that. I'm saying one.
I'm going to go out on a limb here. I'm going to go out on a limb and say that they're going to actually discuss 50. I know that a lot of people have taken it off the table, but we do have a problem, guys. We have a bank run and high inflation. So if they're going to fight inflation, rates have to go up. If they want to do the bank run, they got to do liquidity. So they're going to keep doing liquidity much like the Bank of England did while raising rates.
See, the problem with the raising rates devalues the assets that the banks are holding as collateral. So it makes the unrealized losses at the banks even worse. And therefore, it requires even more liquidity, which creates even more inflation, which requires even more rate hikes, which causes even more unrealized losses. At some point, they're going to realize this thing ain't working anymore. This thing of theirs, I think it's finally run its course. We could put the gold and silver back in money. I just throw them out there. We could put the money back in the money. And I was showing my girls today, actually. I showed them, actually, it was the silver quarter that Mish gave them, actually. The pre-64 quarters that you gave my girls. We turned them on a side. We looked at the difference. I said, oh, this one's brown on the side. This one's silver. Yep, that's because they took the silver out of money in 1964. We talked about the pennies, that they even took the copper out of the pennies because the copper was worth more than the penny was. They've been debasing the money. This thing this is the result of 50, 60, 100 years of currency debasement is what we're seeing right now, and the debt pile that has emerged from it. It's all coming unwound. Thank you very much, Contrarian, sir. I think I'm gonna stick with one more rate hike. I think one more and done. And I think the one is just to show that he still pretends to care about inflation. He doesn't.
I think it's only one more, but I think it's going to be 50.
Oh, 50. Oh, God. Oof. Everybody just got punched in the stomach all at once. Like, ooh, 50. I hope it ain't. I hope it's not 50. I hope it's not. I mean, that is a rip the Band-Aid off. The problem is you rip the Band-Aid off, that's rip the tourniquet off. That's not rip the Band-Aid off. That's rip the tourniquet off. That's like, we tried. We had a good run. Notify next of kin. Dumb Money Media, thank you, Your Majesty, sir, for the super chat. Vince Lancy, VBL, going to do a private Zoom call with all the Silver DJ Club peeps who ask him a question and 2-ounce prize. Deets in the live contest spot on the Reddit menu bar. He's talking about the Silver DJ Club on Reddit. Thank you very much, Dumb Money Media. Guys, check out Silver DJ Club on Reddit, should you feel so inclined. And, by the way, hashtag Silver Squeeze has been trending for the last couple of days, and I bought a little bit of metal, and I was looking around on a lot of the bullion websites. A lot of stuff was out of stock this weekend, a lot of it, and there was a lot of pre-sales going on. I haven't really seen the premiums blowing out yet. The premiums are still, you can still get silver for 25 and change an ounce. You know, the small denomination stuff, you're only going to be paying about $3 over spot. I've seen it a lot worse than that. So the premiums haven't blowed out yet, but the availability is down. Take from that what you will. But thank you very much, Dumb Money Media, sir. Appreciate the super chat and the support of the channel. And are we caught up? We are not. Jared King says, trying not to be paranoid, but am I the only one to question the security of the FDIC for protecting account regardless of size? Do you have cash out of the system? The thing about the FDIC is their rules don't matter to them. Right? The FDIC rules were clear. We got your back up to 250,000. And then the second that became a thing, it was, we got your back no matter what, as long as you're our friend. As long as you're big tech guys in California. If you're a little guy in flyover country, we don't care about you. you can go pound sand. You're only good up to 250,000. So it is impossible to make decisions, to make good, informed decisions when the laws and the rules can change on a dime. We saw that with the meme stocks. The second they got caught naked short, GameStop and AMC, they took away the buy button and made them sell only. They changed the rules so the big guys didn't lose. We saw it with Silver Squeeze when they increased margin requirements and they changed the prospectus on the SLV in the middle of the night and then dumped 2 billion ounces of silver while they had their cronies in the media start talking about how silver was going to go down. All in the middle. They changed the rules in the middle of the night so the big guys didn't lose money. We're seeing it now. They changed the FDIC rules so the big guys don't lose money. They're changing the law in Switzerland so the big guys don't lose money. They're picking which big guys lose money. They're changing the rules. This is not how you restore confidence in the banking system. It's not how you restore confidence in the financial system, by writing the rules as you go. That tells people, I don't know what I'm doing. I don't know what I'm doing. And then people want to go unbank themselves. And then they say, no, don't unbank yourself. What do you think? No, don't do that. You're crazy. No. Write the rules and then live by them. Rules for all of us. So having a little bit of wealth outside the system, I think, is a must at this point, Mr. King. I would absolutely agree with that statement. Thank you very much, sir, for the super chat and for the support of the channel. And I cannot.
What was the pig at the end of Animal Farm, right? On the rules?
Oh, everybody's equal, but pigs are more equal?
Pigs are more equal.
Pigs are more equal. Yeah. All animals are equal. Pigs are more equal. And Napoleon is always right.
Skip to the next one.
Yep, Austin Egbert, thank you, sir, for the super chat. And Austin is saying, Mish, I hope you are not right. And I got to agree with Austin on that one. But, I've learned not to dismiss Mish's inclinations. Because he's had a couple of really good ones lately. I hope you're wrong. I share your sentiment, Austin. A 50 basis point rate hike now would freak people out. And people are already freaked out. So maybe, if you're already on the brink of a stampede, and who knows where we're going to be by Wednesday. Things are happening really, really fast. So who knows where we're going to be by Wednesday. Maybe they do it. Maybe not. All right. Thank you very much, Austin. Thank you, everybody. Let's get into the details of this story here. UBS to buy Credit Suisse for $3.3 billion in deal to end the crisis. You notice they say deal to end the crisis. Even the press is in on this. They're trying to word the stories like, that was close. It's over. The press, the banks, and the governments are unified in their messaging of restoring calm right now. All right. And yeah, I guess there's a, good reason for that. You don't want to cause a panic, but at the same time, you got to be honest with people, and they're not being honest with people. The government will backstop some losses and provide liquidity, and authorities push for a deal amid worsening crisis. UBS Group agreed to buy Credit Suisse in a historic government-brokered deal aimed at containing a crisis of confidence that had started to spread across global financial markets. The Swiss bank is paying 3 billion francs for its rival in an all-share deal that includes extensive government guarantees and liquidity provisions. The price per share marked at 99% decline from Credit Suisse since 2007. Now, here's the problem with this deal, all right? This $3 billion deal. Let's start with this one right here. Switzerland prepares emergency measure to deliver UBS takeover of Credit Suisse. The government is preparing emergency measures. Why? Well, check this out. Switzerland is preparing to use emergency measures to fast-track the takeover by UBS of Credit Suisse. According to 3 people familiar with the matter, again, anonymous sources, the banks and their regulators rushed to seal a merger deal before markets open on Monday. Remember, they're telling us how safe and how secure they think the financial system is. Oh, yeah, this speaks to the resiliency and the confidence. Why are they scrambling to make a deal before Monday? What happens Monday if you don't make the deal? But don't worry, they're very confident in the stability and the strength and the resiliency. Under Swiss rules, though, UBS would typically have to give shareholders 6 weeks to consult on the acquisition, which would combine Switzerland's 2 biggest lenders. 3 people briefed on the situation said UBS had indicated the emergency measures would be used so that it could skip the consultation period and pass the deal without a shareholder vote. In other words, they're changing the law in the middle of the night to sell somebody's stock at a price they have not approved of. They're changing the rules to suit themselves. That's the first case. But wait, there's more. Credit Suisse's $17 billion of risky bonds are now worthless. And this is another case where they're just changing the rules to suit themselves. UBS has agreed to buy Credit Suisse. The government support will trigger a complete write-down of something known as AT1. Holders of Credit Suisse Group's bonds suffered a historic loss when a takeover by UBS wiped out 16 billion Swiss francs, 17.3 billion US dollars worth of risky notes. The deal would trigger a complete write-down of the bank's additional Tier 1 bonds in order to increase core capital, Swiss franc regulators FINMA said in a statement. All right, so these AT1 bonds, they're known as additional Tier 1 bonds, and these are bonds that were created after the global financial crisis in order to improve the capitalization of the banks. All right, so again, it's a rule they made after the GFC to make things better. And these bonds typically pay a higher yield, but in the event of a bank failure, these bonds are basically not first in line to get paid back. Right? They're unsecured bonds in the event of a bank failure. But there's more. Like the way it works when a bank fails, first the shareholders lose everything. If you have stock in the bank, you lose everything. And if there's still not enough money, then the AT1, those bonds, they lose everything. And then the people who have debt to the bank, then they would start to lose money. But that's not what the Swiss did. They let the shareholders cut in line. Moving on here, the bond wipeout is the biggest loss yet. In a typical write-down scenario, shareholders are first to take the hit before AT1 bonds face losses.
That's Class A Tier 1 bonds, right?
Additional, what was it again? Additional Tier 1? Yeah, okay. Additional Tier 1. It's a European thing. It's not a U.S. law. This is European. As Credit Suisse also guided in a presentation to investors earlier this week, that's why the decision to write down the bank's riskiest debt, rather than its shareholders, provoked a furious response from some of Credit Suisse's AT1 bondholders. This just makes no sense, said Patrick Kaufman. He was a portfolio manager at Akia Asset Management. This will be a total blow to the AT1 market. You can quote me on that. Kaufman believes the money should have gone to AT1 holders instead of shareholders, leaving nothing for shareholders, as seniority in the capital structure needs to be respected.
Well, you know why? Someone just pointed out, AF Rules just pointed out, the Saudis just put in 10% of shares, bought 10% of the shares in that bank like 2 weeks ago.
This deal was made with the Saudis. I never thought of that. Oh, my God.
Yeah, that's AF Rules.
That's gross. That is disgusting. So the Swiss government agreed to screw over their own people, shareholders in their bank, to get the Saudis to come in with their oil money, mind you, the ESG bank, their oil money to come in and bail them out. And now they're screwing people. They're breaking the law. This is the second time they're breaking the law, right? No shareholder vote. That's the first law break. And now they're not honoring the capital structure, the seniority in the capital structure. And this chart kind of shows it right here first. First, CET1 capital gets wiped out. All right. And that is your shareholders. They're supposed to take the hit. Then your AT1 capital, and then the people who hold the debt. They didn't do that. They gave the shareholders $3.3 billion, and the people in the middle are losing everything. They're breaking the law. They're making up the rules as they go. By the way, for you counterparty risk folks or you contagion people, Pacific Investment Management Company, a.k.a. PIMCO, they hold a lot of those AT1 bonds. Invesco holds a lot, and Blue Bay Funds holds a lot of those funds, as Bloomberg points out. Now, here's the truly shocking thing about this deal, though. Forget the fact that they changed the rules so no shareholder vote. And forget the fact that they changed the rules so that the shareholders get money and the bondholders get wiped out when the law says the opposite. But look at this. Swiss National Bank offers $100 billion in liquidity to UBS as part of the Credit Suisse deal. And that number is amazing, folks. You have to understand that number. We're talking about Switzerland here, not the United States. I realize it's the era of trillions and these numbers don't seem as impressive. But for a bank and for a credit line in Switzerland, this is killing a squirrel with an atomic bomb. The scale here, $100 billion, 1/8 of the GDP of the whole freaking country is now available to UBS as a credit line that they can draw from their Swiss National Bank. And I did the math with the US's GDP. That would be about a $3.3 trillion credit line being offered to one of our banks here in the US. That's the equivalent of what the Swiss just did. Unbelievable how much money they're offering. And there's more than this. All right. The Swiss National Bank has offered UBS Group around $100 billion in liquidity to help it take on the operations of Credit Suisse. That's them saying, like, if this stuff is so toxic that you start to go under, we'll bail you out. They're bailing them out before they need it. Citing people, of course, unidentified people familiar with the matter. Details of the liquidity offer couldn't be learned, but are part of the talks to engineer a takeover of Credit Suisse. Now, there was other details, like the first $5 billion of losses, UBS is on the hook. Beyond that, the government will give them, I think it was $17 billion, some of the deals. There's just guarantees. They're just throwing it against the wall, seeing what sticks here, guys. That's if you think these people are really smart and they've got this under control and they know what you're doing, what they're doing, they don't. They are desperate. And then this one came out. Oh my goodness, this one. Let me zoom in so you guys can see it. U.S. Federal Reserve. This is a statement that came out a few hours ago, 5 p.m. The U.S. Federal Reserve, the Fed, and the central banks of the United Kingdom, Canada, Japan, the European Central Bank, and Switzerland announced a coordinated action to improve liquidity provision through the standing U.S. dollar liquidity swap lines. Okay, that's a mouthful. Basically, all of the Western central banks, noticeably absent, there are no BRICS countries in this list. All of the Western central banks are enhancing the liquidity provisions in the Federal Reserve's liquidity swap lines. In other words, it used to be that the Fed would only do these liquidity swaps on a weekly basis. All right. Foreign central banks would figure out, okay, our banking system needs $50 billion this week. And then, next week we'll pay it back because we just need to facilitate some transactions. So they do a liquidity swap with the Federal Reserve. They'll park 50 billion Swiss francs over there and they'll get $50 billion back. And then the Swiss National Bank will distribute it among their banks. That would be 1 week. They could do that once a week. They had to guess what they were going to need for the whole week. Well, right now, there's no way to guess how many dollars the banks are going to need in the next week. So the Fed has changed this to do it daily now. Every day, foreign central banks will be able to go to the Fed and get as many dollars as they want. And the Fed will create them digitally and give them to them. The Fed is now propping up the entire global banking system. And at least temporarily, if this does not end fast, this is hyperinflation right here. If this is anything more than a couple of days, look out, folks. You don't want to be anywhere near this. And we got another joint statement from the Fed and the Department of the Treasury today. It's a short one. Here's Janet Yellen and Jerome Powell, a joint statement by the Lovebirds. They say, we welcome the announcement by the Swiss authorities today to support financial stability. Oh, yeah. Reminds me of that scene from Three Kings. Here's your stability right here, my main man. The capital and liquidity positions of the U.S. banking systems are strong. Doesn't it feel strong? Doesn't the capital and liquidity feel strong right now? Aren't they projecting strength? And the U.S. financial system is resilient. I don't feel resilient. We have been in close contact with our international counterparts to support their implementation. That's a very strong statement. They're projecting a lot of strength. Does it seem the fact that they're setting this up so infinite dollar glitch every day is available to them? These are the actions of desperate people, and then they tell us how strong the system is and how resilient it is. How the Swiss are breaking the law, writing the law as they go, changing the law in the middle of the night, not even bothering to change the law, just not following it, like the FDIC, kind of. You remember we were supposed to bail in Dodd-Frank? Anybody above 250,000 gets bailed in? Silly rabbit. These are not the actions of confident people. And there was this tweet here. Where was it? Oh, I had it. Nope, not that one. Oh, I must have closed it. Oh, well. Anyways, guys, I want to remind you of this one and why this sudden big shortage of dollars. And I talked about this a couple of months ago in December. I did a video about this. This report by the Bank of International Settlements. dollar debt and FX swaps and forwards, huge, missing, and growing. The Bank of International Settlements warned about this dollar shortage months ago. They saw it coming. They have been planning for this. Just want to read a little bit of the excerpts here. FX swaps, forwards, and currency swaps create forward dollar payment obligations, i.e. debt, that do not appear on balance sheets and are missing in standard debt statistics. They do not appear on balance sheets. Nobody knows how much of this is out there. Non-banks outside the United States, so hedge funds pretty much, non-banks owe as much as $25 trillion in such missing debt, up from $17 trillion in 2016. And this is as of December, all right? So this is old. Non-U.S. banks owe upwards of $35 trillion. Much of this debt is very short-term, and the resulting rollover needs make for dollar funding squeezes. This is a squeeze on dollars going on right now. Policy responses to such squeezes include central bank swap lines that are set up in a fog with little information about the geographic distribution of the missing debt. So they don't even know how much of this is out there. This is the euro dollar system. There is no way of knowing how many dollars are owed in these banks and these non-banks over in Europe. And so the Fed has just said, we will make it so you can come get every day as many dollars as you need. And the Bank of International Settlements warned us, huge, missing, and growing were the words that they used. All right.
We did have about 5 super chats.
We're back about 5. Okay. Who was the last one I got to? Oh my goodness. I got to go way back. We got Darren Jones, right? Yep, we got the CBDC one. We got Robert V. We got that one.
I think it's Dan.
Yeah, okay, I backed up a little bit far. I'm coming, guys. I'm coming. Oh, man, I went way back. There is the king of money. Whew, you guys are going crazy today. And Jared. All right, Austin was the last one. We got through him. There's Dan Hedin. Thank you, Dan, very much, sir, for the super chat. It says, bank nationalization coming to a country near you. You know, Dan, that is exactly what they did with that $100 billion swap line, with that 1/8 of GDP, not swap line, credit line. That's a Swiss National Bank. I mean, that is basically a private merger in name only, this deal with UBS and the Swiss National Bank. First of all, they broke the law in 2 places, and they couldn't have done that unless the government said, we got you. All right? So the government gave them the all clear to go ahead and break the law in at least 2 places. First, by not honoring the seniority of their capital structure, and second, by allowing them to skip the shareholder vote, which, by the way, you own a stock that was worth $2 at the close on Friday afternoon, and you just found out in the middle of the night that it's being sold for 30 cents, and you don't get a say. How'd you like to be a shareholder in that bank? How'd you like to be? That's why you got to be careful with these dip buying guys. You may think you can buy the dip and these banks are going to get bailed out. Yeah, the bank's going to be bailed out, but you won't. So be careful with that. Yeah, this was nationalization. I mean, the Swiss government has basically nationalized UBS with a $100 billion swap line where the Swiss National Bank will just produce 1/8 of GDP out of thin air and give it to this bank if they need it. It is now basically a nationalized bank. And by the way, with the FDIC unlimited insurance offer to our big banks, creating runs on our regional banks, making these big banks even that much bigger, didn't the Fed just nationalize the big banks? Pretty much by putting their competition out of business. And then what happens if the Fed just decides we're going to take away that insurance offer now? Just kidding. Those big banks died. So the big banks have taken over. The question is, have the central banks taken over, or have the big banks, which tend to own the central banks, have they used the central banks to take over for themselves? I'm not really sure who's really pulling whose strings right now. All I know is it's not me. I'm not in this club. I guarantee you that. We're not in it. It's a great big club, and we're not in it. Thank you very much, Dan. And here he's back. He says, don't forget to stop up on extra food and meds. You know, that meds is a big one. I mentioned before that, I need to have, food just in case the credit and the debit cards don't work someday, right? You got to have a little bit of cash, be able to buy food, be a little bit resilient, have some stored up, but don't forget the medications, folks. Don't forget that. If say there's a bank holiday, right? You ever hear of a bank holiday? Oh, that sounds nice. A holiday? We all get the day off? No, that's not what that is. That's when they just close the banks. They say there's a bank run and we need everybody to stop taking money off, so we're just ordering all the banks in the country to close on a Tuesday or a Wednesday, right? That's what happened in 29 or 30 or whenever it was. How would you buy your medicine in that situation? If the swipe didn't work, if the chip didn't work. So think that, folks. Don't wait to get those prescriptions refilled. Let's just put it that way. Thank you very much, Dan, and that was a very good public service announcement, sir. Fugazi and fairy dust are not stability, says Freedom for All. Yeah, I agree. This is not stability, what they're doing right now. Stability, changing the rules in the middle of the night on a weekend while everybody is not paying attention, robbing shareholders, robbing bondholders, looting people's savings via inflation in the middle of the night. It's not stability. This is anti-stability. And they're insulting your intelligence when they tell you that they believe the financial system is strong. All right. If the financial system was strong, I would not be doing this live stream right now at almost 9 p.m. on a Sunday. All right. This is the Sopranos hour, right? 9 p.m. Sunday. That was Sopranos. That was Game of Thrones. That's the best hour of TV in the world. Nope. We're talking about banks right now because they have done such a fine job with the stability and the resiliency of the financial system. I agree. It's Fugazi and fairy dust, Freedom. Thank you very much, sir. Guys, I really appreciate the generosity and the support of the channel. And where we got Davey S. What's going on, Davey? Is that Mr. Hasselhoff I'm seeing in that picture there? Was Credit Suisse naked short selling AMC and GME? Maybe that's what's hiding on their balance sheets. Thoughts? I don't.
Lots of stuff hiding on their balance sheet, and I bet you a lot of that stuff starts with Evergreen.
Evergrande?
Evergrande.
Yeah, Evergrande could be involved in this. As far as AMC and GME, I'm sure there's a dotted line. Credit Suisse has got their fingers in just about every pie in the world, right? They're a GSIB bank, so I'm sure some of it. But are they the culprit? No, that's more of a Citadel, more of a Ken Griffin thing. I wouldn't be surprised to find out maybe some trading desk at Credit Suisse was at least involved or adding to the pile. But are they the big boss of the naked shorts? No, I don't think so. I think Mr. Griffin is probably the head of that particular snake. But let's be honest, guys. We're maybe they're different individuals, but they're the same they, if you will. The people who are changing the rules in the middle of the night for their benefit at the expense of us, that is they. We are us. All right. Ken Griffin is they. Credit Suisse people are they. The central bankers are they. Janet Yellen, Jerome Powell, they. All right. There's they, and they maintain their power by taking it from us. And all these things that are being done, all these changes to the law, what they're doing is they're spreading the risk around us. They're removing the risk from themselves, and they're spreading it across the general population. And they're telling us it's for our own good. All right. And look, if there was a major collapse tomorrow, if the banks were to fail, it would be incredibly painful for the average person, for all of us. All right. Make no questions about that. As much as it would be fun to watch these crooks lose everything, make no mistake about what that means for you and yours. It would be a struggle, a real struggle. All right. There would be a human death toll. There would be a lives lost, a lot of them. There could be wars fought over something like that. But they lose their grip on power in that scenario. They lose their hold. They become like the rest of us in that scenario. And that's why they'll cling to it. If they can take it from us, that's what they'll do. That's what they've done over and over again. And so far they've gotten away with it. And well, we'll see if they can get away with it this time. They will keep changing the rules as long as we let them, as long as nobody holds them accountable. They will change the rules every time to their benefit. And look, there's going to be a lot of other stuff in the news in the next couple of days. A lot of stuff you're probably not going to like, or some of it you might like, depending on your inclination. It's a distraction, in my opinion, from this. I think this story that is coming out has been in the back pocket for just such a scenario. All right, so when the circus starts, don't look at the circus. Do not lose sight of this story when the circus starts. And I don't want to get into the circus because it brings out the worst in people. But they will distract you with bread and circuses. Don't let them. Keep your eyes on this. This is the takeover. This is the power grab. The banks, the Bank of International Settlements, the central bankers. This is the front line. Pay attention to it, folks. Cheese Dip Marin, thank you very much, sir. He says, how much should people be worried still holding money in state credit union banks at this point? Should people take money out before they lose it? Look, credit union banks are governed by a different set of statutes. Somebody pointed that out in the comments on my live stream on Friday. So it's different rules, but similar coverage limits, if I'm not mistaken. So I can't comment specifically on credit unions because I haven't studied the credit unions like I've studied the FDIC and the Orderly Liquidation Authority. You know, all those rules that I spent hours and hours studying to make a video just to have them throw it out the second they started using it. I put a lot of work in on that bail-in video, guys. I spent a lot of time reading through some really boring statutes, really, really boring stuff, and then they just ignored it all. So,
well, I do have a comment on the credit unions, right?
Go ahead.
Credit unions are very stable and boring, right? The only time credit unions really start coming into play is auto loans. It's like 60% of their business is auto loans. So that's when credit unions you need to start worrying about, is when you start hearing about the auto loan issue.
Now, let's talk about that for a second, Mish, because that's a really good segue. A lot of your consumer lending happens at these smaller regional banks, right? A lot of your car loans, a lot of your credit card issuance, a lot of the routine debt that gets spent on a daily basis comes from these small banks. And these banks are all on defense right now, which means they're about to clam up. They're about to be a lot more strict on who they lend to because they have to be. They can't absorb losses anymore, not with this run going on. So this is going to kill the consumer, this regional bank run, if they don't get a hold of this. That's why another one of the reasons why I said they better get their act together fast, because you're talking hours, maybe days, they have to walk this back. I wouldn't want to be anywhere near an auto stock right now, because who's going to be able to get a car loan when none of the credit unions will write car loans, when they won't underwrite it? Who's going to be able to go out and finance anything if none of the credit unions are writing loans anymore? So remember the last time we had a banking crisis, 2008, 2009, what happened to the auto stocks after that? Yikes. Are we gonna revisit it, the auto bailouts too? I mean, are we gonna play this whole stupid song all over again? Looks like it. So that I think is the bigger worry with the credit unions, is not necessarily will they fail or not, because I think they're probably safer. The credit unions don't worry me, but it's the credit unions lending causing problems elsewhere in the markets and financial systems among consumers. That could be a problem. And that's the real crisis out there, folks, is the debt crisis. This is not the debt crisis that we're talking about. This is a crisis of confidence in the banks brought about by unrealized losses in the bond market, which was caused by the Fed's tightening cycle.
This is not the credit cycle that you're looking for.
This is not the credit crisis you're looking for, yes. He can go about his day. Move along. Yeah, seriously, this isn't it. This one came out of nowhere, this crisis. And the big one is people not being able to pay their debts, not being able to pay their credit cards, their auto loans, their mortgages. That's still in front of us. This is just the precursor, man. This is pregame here. I am caught up. All right, there's another story I want to talk about. And unless something has happened since we started this, here's where we're at. First of all, First Republic Bank, the next domino. All right. And it has been the next domino for a couple of days now. First Republic got that $30 billion deposit from the big banks. I made a video about that, about what a joke that was, because depositors panicked and took their money out of First Republic and put it into the big banks. And then the big banks took that money and just put it back in First Republic. Just circular movement of the same dollars. All right. But First Republic just got downgraded again by S&P for the second time in a week. First Republic Bank was downgraded again Sunday by S&P Global, days after the ratings firm cut the lender to junk. S&P said it lowered First Republic's long-term issuer credit rating from B+ to BB+, confirming an earlier Bloomberg report. Following Thursday's uninsured deposit of $30 billion by the 11 largest banks in the country, They're saying it's an uninsured deposit, but they can change the rule anytime they want now. So I'm sure those deposits will become insured if they ever become at risk. Together with cash on hand, First Republic Bank is well positioned to manage short-term deposit activity, the company said. By the way, please stop reassuring us how strong your bank is, for the love of God. Everybody who reassures us how strong their bank is, their bank ends up failing. Please do not do that. The support reflects confidence in First Republic and its ability to continue to provide unwavering, exceptional service to its clients and communities. No, that's not how that works. When big banks bail you out, that's not because they're confident in you. It's because they're confident you're going to die and you need a bailout. S&P downgraded First Republic to junk on Wednesday and then downgraded them again today. In explaining the rationale for Sunday's action, S&P said First Republic rating remains on Credit Watch negative, indicating we could lower the rating further if the bank is unable to demonstrate some progress in stabilizing deposits and recovering the franchise value that, in our view, have likely eroded. We do not view this deposit infusion, which has an initial maturity of 120 days, as a longer-term solution to the bank's funding issues. Attracting meaningful deposits will be difficult, constraining the bank's business position. So S&P is saying this $30 billion cash, it's not enough. We're downgrading them again.
Now, what that means is the borrowing cost of the bank is going up. So they're having to pay higher interest on their loans. So it's just exacerbating their problem.
Yep. Yeah, because the deposits are leaving these small banks, going to the big ones, right? So how might they convince their customers to stay? Well, you might say, we're going to raise your interest rate on your account. So we'll give you a higher interest rate than Bank of America will give you or JPM will give you. Well, that eats into your profits. Now you need to make even more money on your investment portfolio and your loans in order to pay for those higher interest rates you're paying out. Well, they already have a mountain of unrealized losses on those bonds. They can't afford that. So they have no easy way out. What S&P is saying is this $30 billion cash infusion was just a headline grab. It was not an effective rescue of the bank. They still need to solve this problem. Again, that's why I say the FDIC, the Fed, the Treasury, they need to walk back this uninsured deposits thing. They need to stop it. That's the only way they're going to stop the flow of large depositors out of these regional banks, is if they take away the safety in the big banks that they've offered for free, which was the rule all along before this crisis started. That was the law. There was no act of Congress that changed it. There was no debate. There was no legislation. There was no signing ceremony. They just changed the law because they felt like it. And now banks are going under and people are losing money and the whole freaking global financial system is a mess. It's not how we're supposed to operate, folks. Check this one out. The Fuzzy Panda put this one out. Thank you, Fuzzy Panda. He says a large number, more than 20. This came out last night. More than 20 private jets landed in Omaha yesterday afternoon. Jets flew from the HQs of regional banks, ski resorts, and D.C. Did Buffett just fly all the regional bank CEOs into Omaha and offer a deal to save banks? That would be Warren Buffett, by the way, and this is showing the flight path of some of these banks. More than 20 private jets from regional bank HQs all flew to Omaha yesterday, and then this story came out today. Warren Buffett in discussions with Biden officials on the banking crisis. And there's really nothing in this article other than Warren Buffett in discussions. I think their plan was for them to have some kind of announcement by tonight ahead of Monday's open, and it looks like they weren't able to pull it off. So all this says is Buffett is talking. Buffett wants to do something with banks. Okay, great. He's sitting on a mountain of cash, by the way. Berkshire Hathaway has, what was it, $125 billion in cash, Mish? Something like that?
Yep. Yeah, 126, but yeah.
But it looks like this didn't happen in time. Maybe they're going to keep working through the night. Maybe we'll have something for my live stream tomorrow morning about this. I don't know. But Buffett was instrumental in the last banking crisis. Warren Buffett took a big stake in a couple of banks, and it was like 5 days before TARP was passed. And Warren Buffett made an awful lot of money on that deal back in 2008. I wonder if he's setting up for a repeat now. Of course, if that means we're following suit, that means the crisis continues to get worse for the next week, and then even more money gets dumped from heaven onto the markets to try to solve the problem. All right. So they were trying to get something together, and it just didn't work. All right. Here's the other thing I want to talk about. This one just came out tonight, not too long ago. U.S. lawmakers to examine the merits of higher FDIC bank deposit insurance cap. And this is just another case of this is not how you project confidence. Okay. The law was $250,000 was the FDIC insurance cap. If you raise it, you're telling the public you're afraid. You're projecting weakness. We had the law in place and we told everybody that was enough to prevent the next crisis. And then it got here, and in the middle of the night, you're trying to change the law. This is not how you fix things. 4 prominent U.S. lawmakers on banking matters said on Sunday they would consider whether a higher FDIC limit on bank deposits was needed to stem a financial crisis marked by a drain of large uninsured deposits away from smaller regional banks. You could raise the limit, or you could just stick with the limit you have and actually enforce the limit that you already have. What's the point of another limit, of changing the limit, if you've already told everybody your limit means nothing to you? It's just basically whether you feel like enforcing it or not. Let's say they made it $100 billion limit. Would it really change? Because they could just throw it out anytime they want. They're just making it up as they go. I think lifting the FDIC insurance cap is a good move, said Senator Elizabeth Warren, a Democrat, on CBS's Face the Nation, referring to the FDIC's current $250,000 limit. Asked what the new higher level should be, Warren, a member of the Senate Banking Committee, said, "This is a question we've got to work through. Is it $2 million? Is it $5 million? Is it $10 million? Small businesses need to be able to count on getting their money to make payroll to pay the utility bills." Now, look, folks, the FDIC right now does not have anywhere near enough money to back up the existing limit. Nowhere near enough. They're already talking about raising fees just to cover what's going on. If they're going to raise the limit, then they're going to make banking a whole hell of a lot more expensive for everybody, because FDIC is funded by fees charged to banks, to member banks. And those member banks compensate for that by charging fees to you. ATM fees, minimum deposit fees, minimum balance fees, transfer fees, cash advance fees, interest on your credit cards, whatever. If they raise the FDIC limit, they're going to have to collect more money for the deposit insurance fund. So they're going to have to raise the fees on banks, which means the banks are going to raise their fees on you. Why should you have to pay? Enforce the limits that you already have. Don't just change the rules because it got hard. And I used the analogy on Twitter the other day. This is like the kid, the little loser on the Little League team. His dad's the coach, and he keeps striking out in practice. And every time he strikes out in practice, he cries and he stamps his feet. And the coach says, "Oh, no, okay, that do over, don't cry." Well, that kid's going to suck on game day. Don't change the rules because Johnny struck out. Teach Johnny how to swing. Sorry, I'm yelling. I need to calm down. You're supposed to kick me under the table or whatever. I mean, you're in Nebraska, but kick me under the table anyway.
Stupid Johnny.
What's that now?
Stupid Johnny.
Stupid Johnny. Yeah. Sounds like Johnny can't swing. Anyways, let's see what's going on in commodities right now. We've actually got very little movement in anything right now. It's almost like the world is just waiting to see what happens overnight. Gold is only up 90 cents. Silver's down a penny, 2 pennies. While Silver Squeeze is trending on Twitter and the silver bullion dealers are being drained. That doesn't make sense. Stock futures are pointing to an open up of 50 points in the NASDAQ, 200 points on the Dow. So, I mean, these are no never mind numbers coming from commodities. The markets right now are saying, let's see what kind of crap they come up with while we're sleeping. That's what it's telling us. Oh, I got a couple of supers here. Who did I miss? Was Dan Hedin the most recent?
You should have 2 to get.
I got 2 to get to?
Yeah, Learcy was first.
Okay. Hello. Yersey, I'm going to try. You know him? You know him? I know him. Yeah, you know him? Learcy, you know him, says, paying for some of my views. Sometimes I use ad block on YouTube. Ad blocker. Oh, you hit me right here, Learcy. Thank you very much for the super chat and for the honesty. Don't worry about the ad blocker. If you got to do it, you got to do it. I probably just got myself shadow banned, but Says, thanks for keeping us up to date with all these shenanigans. Hit the like. Absolutely. Thank you very much for that. Hit the like message. Please hit the like. Why not the subscribe and the notification bell while you're here? Guys, I'm going to be live tomorrow morning for the opening bell, too. Who knows what is going to happen in the 12 hours and 15 minutes between now and then? We are in a very busy news cycle right now, guys, and a lot can happen in a few hours. This is one of those, decades where nothing happens and then hours when decades happen. That's what it is right now. And this has been going on since 2 Thursdays ago. I remember that day when I saw all the bank stocks were down 5 to 7% and nobody was talking about it. And I remember I called Mish. I was like, we got to go live. Something's up. Something is happening right now. And nobody was talking about it. All they were talking about was stupid political theater, which is what they're going to try to use to distract you guys, is that political theater. Don't let them. Keep your eyes on this. Keep your eyes on the money. That is where the power is, not the stupid team sport of partisan politics, which is all it is. You root for the Yankees if you grew up in New York. You root for the Phillies if you grew up in Philly. That's what politics has become, all right? That is not the story right now. Whatever they do, however it is likely to infuriate you, stay on the money. Do not lose sight of the money. That is how they're stealing power. Thank you, Dan Hadeen. And thank you, Learcy, again. Dan Hadeen says, watch the private jet tracker to see where the big money is going. Right now it's Omaha, or at least they went to Omaha. I haven't seen an update on the Jets, where they're going, if they've even left Omaha. Maybe we're going to have an announcement about Berkshire. Are they going to set up a private bank insurance fund? Is Warren Buffett going to take a stake in First Republic? I'm just throwing against the wall here, folks. Please, this is just me speculating randomly. I don't know what's going to come out of Omaha. I really don't. But when the government is involved and banking executives are involved, it's probably not going to be good for you or I. That's all I can tell you. They don't operate on our behalf. But thank you very much, Dan Hadeen, again, sir, for the super chat and for the support. And thank you, Andrew Poloni. Says, thank you for all you do. It's much appreciated. Well, I appreciate you very much, Mr. Poloni. Thank you very much. And, guys, we've been going for an hour and 15 here. Look, long story short, they're making up the rules as they go here. That's the takeaway, is everything they're doing, it's not legal. Although it's not illegal, is it? Because if the people who enforce the law look the other way and let it happen, then through lack of enforcement action, it becomes legal. And it's impossible.
Or they change the law.
Or they just change it in the middle of the night. Yeah. And it's hard to trade. It's hard to invest. It's hard to plan when at any given time, the rules could change, right? If you're trying to play a Monopoly game and then all of a sudden the person who's losing changes to say, I get $5,000 from every player. Well, how do you plan ahead for that? How do you position ahead for that? There's no way to do it. So you got to be nimble here. And for the love of God, people, please be careful on margin. Please. I can't tell you what to do with your money. All right. I don't have the permission slip from the government that says Jack is allowed to tell you what to do. You have to go take a class. You have to pay a fee, and you have to get a permit from the government to tell people what to do. As long as you tell them what the government wants you to do, they'll let you do that. I don't have that piece of paper. So all I can ever tell you is what I do. I am not touching margin right now. I'm not touching leverage right now because they will wipe you out in the blink of an eye. And I would also remind you that one of the rules is don't fight the Fed. Right now, the Fed is pumping asset prices like we haven't seen since March of 2020. And by the end of this week, they could be pumping asset prices even worse than they did in March of 2020. All right. I don't know if the actions they've taken so far is going to be enough to stop this thing. I don't think it is. All right. They have not yet taken action sufficient to stop the regional bank run here in the States. Maybe Credit Suisse. Maybe they killed that one. I don't know. We'll find out in a few hours. But they definitely have not stopped the regional bank run here in the States. So be careful. Take care of yourselves, guys. Take care of your families. Take care of your immediate house and get your immediate house in order. All right. Get those prescriptions filled, a little bit of food, a little bit of cash on the side. If you want to unbank yourself, somebody commented the other day. By the way, my dad told me how much they'd like to comment. I can't remember the name of the person, but somebody commented BYOB, be your own bank. What fantastic acronym that is. Be your own bank. Oh, I'm going to tell you who it was. My dad said it. Oh, no. Me and my dad were texting all weekend. Sorry, I got to scroll way back to find it. Never going to find it. Anyways, guys, Be your own bank. Own physical metals. Have a little bit of cash on the side. That's what I do.
Knock out a couple more super chats.
I got a couple more. I got Ewok Jerky. I crack up every time I see that name. Poor Wicket. Ewok Jerky. You killed an Ewok and you put him in your Ronco electric food dehydrator, didn't you? He says, I believe in the Federal Reserve like I believe that the Cubs will win another World Series. They broke the curse of the GOAT, didn't they? Did they ever break that? I know the Red Sox broke the Bambino. Did the Cubs ever win a World Series? He said another, so I guess.
No, they broke the curse.
They did break the curse of the GOAT? Okay. I haven't. You see, bread and circuses, I haven't really followed baseball or anything. I hung out with my buddies from college a couple of weeks ago, walked away with a bad back because I slept on a couch for 2 nights. And we were watching college basketball all weekend. And I like basketball. I used to play basketball a lot, but I just can't get into it anymore. Not when this stuff is going on. I just lost interest in it. But yeah, I don't really believe in the Federal Reserve very much, but I do believe that the Federal Reserve has the ability to manifest money out of thin air. That is an advantage nobody else has. So you got to pay attention to what the Federal Reserve does. Hashtag end the Fed. Remember that one. Hashtag end the Fed. Thank you very much, Ewok Jerky, sir. You are a gentleman and a scholar. And you said, Mister, there was another one. I don't think I missed anybody.
That was the last one.
That was the last one. All right, guys. I want you guys to have a good night, get some sleep, because starting first thing tomorrow, this whole circus is going to be spun up again. And I don't know if what they did this weekend is enough to stop this thing. I don't think it was. They may have stopped the bleeding in Europe. They have not stopped the bleeding in the States yet. That's just my opinion. We'll see if it's right starting tomorrow morning. Mish, you got anything you want to throw out there?
Stay safe, everybody.
Stay safe, absolutely. Stay safe and eyes on the prize. Don't take your eyes off the money, everybody. All right, guys, thank you very much for all the super chats. Thank you to my Patreon supporters for everything you guys do for the channel. There is a link down below to the Patreon should you feel so inclined. Please like this video and subscribe while you're here. And, of course, hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.